Good evening, everyone. Happy Saturday. I hope you've had a wonderful weekend so far. We are starting a little late today, but hopefully you all had a great day so far. So we can review the markets, the economy, look at what's happening in the world, in the globe. So in our journey today, as always, we like to talk about economy, the markets, of course, emerging markets, the lesson of the week, the trade of the week, and the screen of the week. So with uh, last week, of course, we had Chairman Powell with his House and Senate testimony, his semi-annual. And of course, we had the State of Union. We had the ISM, the manufacturing and non-manufacturing PMI. And of course, the last but not least was the non-farm payroll numbers for the employment. But everything, of course, was overshadowed with the situation in Europe with Russia and Ukraine situation. So the markets were really paying attention to that, while in one eye they were watching what Powell has to say. And as I said last week, it's like bad news becomes good news. And in a sense, the, the thought was, again, with the pressure from what's going on, the pressure on the commodities and everything, the effect of it on the economy, would Powell kind of sit back? And the way the situation came out, which is the FOMC meeting will be not this week, the following week, the week of 15th, that's, he said that they will do 0.25%, while there had been a strong indication they might do 50 basis point increase. On the other hand, next week we'll talk about in the CPI numbers will come, which they are a very important factor of the future. So on one hand, all the eyes are what's going to happen with the war, and if something magical happened this weekend, whatever happened, it was peace talks and everything. Well, and then the attention will go to the inflation and interest rates. So we are in a tough situation. So, but it is a juggling act. Last week, again, the initial jobless claims and the continuous jobless claims have been improving. So that's good news. And it goes hand in hand, obviously, with the employment numbers. More people are, earning more. So the under the hood looks good. The retail sales look healthy. So that's that was from the, again, looking under the hood. We had the ISM manufacturing, the PMI composite index, as we mentioned in our the videos that I send out on Sundays about the trading ideas. We talked about what it meant. So anytime it's above 50, that's healthy. That means economy expanding. When it goes below 50, that means we have contraction. So right now, obviously, we are above that. The non-manufacturing, which is the service oriented, they will also above. So the composite, we are above the 50. The employment numbers came last week, and they actually surprised everyone. It was interesting looking at the all the predictions. It was such a large and wide range. It was from as low as 85,000 to as high as, I think, 725,000. So that was a pretty wide range. But anyway, the numbers came at 670,000, which was much more than average, what was expected. And also the previous months were revised as well. So now, consequently, the unemployment rate has dropped to 3.8%. And this is, we had the lowest in a long time. It was like pre-pandemic when we were at 3.5%. So we are very close to that. Also, the hiring has climbed across a lot of all the sectors, especially with the leisure, hospitality, healthcare, and the transportation being the strongest. And average earnings actually stayed flat. And in some ways, pay actually fell in some of the segments. But again, the thought is maybe that was because of what happened in December and because of the Omicron. Now, the other thing is, as far as the workers, the percentage that they're leaving the jobs, it rose to from 15.1%. So what that means, they're pretty confident that they can find another job. So, and this is the highest since April of 2000. So for upcoming week, I think there's few things we want to watch, which is, I think, the most important one the markets are really looking at is that on Thursday is the CPI and the core CPI numbers. So as you know, the last time we had analyzed it was like 7.5%. It was the highest in 42 years or 40 years. So we want to watch that. The other thing is basically there's the consumer sentiment will be coming in. And over the next weekend, which we will talk again, it will be daylight savings time in the United States. So just be prepared for that. So the markets, the sentiment, again, you can see how one day, if the market goes up, sentiment goes up, and it goes down, sentiment goes down. You know, this past week, that 53.7 was really the lowest or the highest actually from the bear side, and 19.2 the previous week was one of the lowest from the bull side. But going under again with the numbers, this has gone, and this is real fear now. And it's like as you know, there's been a lot of hedging going on, which that one of the factors here to look at the movement from the risk on to risk off assets for the safe haven assets, the put call ratio, such a short ratio. So all of those go hand in hand. So we are at 17, which is actually extreme fear. And the Citigroup panic is at 0.06. So you see how the trend has been in past year and a half. So that's, again, telling us the markets are worried. The only thing is, once we look at the volume, you shall see still there's a little complacency. We haven't had the capitulation, you know, this big fear that the markets really crashes and bounces back. So that's one concern I have is, and I think the reason for that is, in my opinion, is because a lot of people, a lot of especially institutional money has been hedging for a long time. So they have been staying longer in the markets than usual. So that could be one of the reasons that we still haven't had a big panic. This is, again, I've said it many, many times, the interest rates, the bonds are the leading factors if you want to invest in equities. And as you can see, the short-term rates have been going up, but the long-term rates in from UK to German to US, they've been going down. And of course, this is direct result of the safe haven nature of the treasuries and the notes and the bonds and the bunds and the gilts. It's the money is looking for safety. And that's what has happened. So it is fundamentally, as far as the nature of the inflation hasn't gone away, it could be even worse. That's why we want to watch the numbers this week, this coming week. But also the interest rates concern still there. But the fear of what's going on in Europe has really took the money and taken the journey to the fixed income. Also, we want to pay attention again to the yield curve, because again, the worst case we could have is a slow economy and inflation, and we really want to avoid that. Now, what is happening, I want to share this with you. You can see exactly a year ago, this was the nature of our yield curve, how steep this is from 2-year to look at the 10, and then we go to 30-year. This is a sign of expansion. And once you fast forward to just yesterday, I want you to pay attention from the 2-year to 10-year. This is called flattening. We've not inverted, so that's good news, but you see that the comparison, even from a month ago, what has happened. So this is what we want to pay attention, see how these yield, how this yield curve is behaving. I want to do something different this time as far as the indexes go. Number one, we're looking at the biggest hit market has been the NASDAQ from the highs of January 3rd till yesterday. We are down 15.91%, which is its past correction. 20% or more, that's the bear market. So that's the hardest hit. S&P is almost 10% down and Dow is 8.65. Of course, oil has been on fire. The highest it has been, the height that we had was 147.70 in 2008. And with all the supply demand imbalance, that's what is driving this. Again, so much worry about supplies. So and then there's a talk of Iran, and there's a talk of the US is not going to import the Russian oil. So all of that has going hand in hand. So the question would be, when will this stop? And it's going to be all depends on the demand side and the supply side. So as long as you have that strong demand, this is not going to go away unless the supply can be changed. As far as U.S. with the opening the pipelines or doing more drilling, I think that problem will run through. Even the perception that if they dealt with Iran and everything went through, and let's say they got a deal, and this is March, it's probably going to take till June, at least 2 or 3 months before the flow will come in. So that's not a short-term solution. So that's what we want to watch that. As I mentioned, unless there's something magical happened this weekend, then that's what looks like that's what the oil is really paying attention to. The reason I want to share this with you was more on the style, and as far as looking at for the past week, for instance, and year to date, for the past year, want to compare the large cap growth. We've been talking about growth versus value. And I just want to show you, like just last week, of course, everything was down. And you can see, except the commodities, which we'll discuss it a little later, like a mid cap growth versus value, small cap growth versus value. You can see, although, again, value was down, it was much, much less than actual growth. So, and then we can look at what the global titans, we look at the UK, look at the India, REITs, and then we go to the e-commerce and internet services. They've been really suffering. As far as the charts go, there's a couple of things. This is, again, the moving average. We look at the Fibonacci, and you can see there's this cluster here. And that really made me interested in finding out what's going on. You see, these are like almost like sticks standing next to each other. It's like a cold winter day, and you're standing outside and you want to be close to your buddies. And there's been this really back and forth. One thing is, if you notice, every time we went that 4,300 was a very pivotal point. I would even say 42.85. And what happened was looking at that, and it looks like, again, the markets, every time it went there, it bounced. And there's a magical number around 4,400. So the way it looks like, I think we've discussed it. We had a class on fintech, and we mentioned, by 2029, I think about 91% was told. 91% of the trading, at least, it was going to be done by AI, or it's going to be done by really the algos and the computers. So we got to pay attention to that, the computer program and all the supercomputers. And it looks like this 4,300, 4,285 area, what happens is they're programmed that when it gets there, it's time to buy. And if it doesn't, and if it goes down, then it will be about 4150 area will be the place. And we've talked about 4200, how important that was. So in that area, it looks like the buyers will come. One of the interesting things about these algos and program traders is they get programmed on a quarterly basis. So they have their quarterly numbers, and let's say it's end of the March, when April starts, they reset. So these numbers, basically from January 1st till March 31st, they're pretty set and telling them, listen, if it hits that number, buy it. If it hits that number, sell it. So it looks like, at least for March, we might be really playing around that, as I mentioned, 42.85, and then it goes to 41.50 or so, somewhere around that. So, but this was interesting to watch this, that, it happened once, two, three, it never went down there, but it was 5 days. We stayed above that 42.85 zone. As far as the Bollinger Bands and how the S&P 500 has behaved, again, we cannot break through that 18-day moving average. So that has been, with a lot of uncertainty, that's needed to be broken. Hopefully with March around the corner that we are in now, basically we can have hopefully positive things. But right now, with the situation with with Russia and Ukraine, there's a lot of uncertainty. Now, one word of caution I have to mention: for some reason, TradeStation had a little problem. I tried it many times, and I think it's more of an internal with the TradeStation. The numbers you see here, they don't match these numbers. They're like a few points off. It's not that significant to affect our analysis, but this is the correct number here. So just pay attention to that. But again, NASDAQ has been the weakest. They really topped in November. And here they got rejected at 18-day moving average. Again, the same thing with the Russell 2000. Now, Russell has been bouncing, last week we talked about, from this 100-week moving average. So it's kind of basing right now. So, and every time it goes outside this Bollinger Band, it bounces back. But we are flirting with that 18-day moving average. The Dow is also under their 18-day moving average, went outside the Bollinger Band, and we came back up. And last week I introduced you, looking at the mid cap. Mid cap are looking more like the Russell or the small cap. So we are flirting with that 18-day flatten. You see how the MACD is basically very much flat. As far as the transportation, now we talked about transportation being a leading indicator, not as much as it used to be, let's say, in early 1900s and even mid 1950s and 1960s, but still plays an important role because of the health of economy, which is depending on its transportation, gives us the idea of what's going on with the movement of the goods. So it looks like you can see there's a little turnaround. We went outside the Bollinger, hit their support, and if we actually broken above the 18-day moving average, of course we are under the 100-day moving average, but generally the transportation is a leading indicator. As you could see, beginning of November, it hit all-time high, and after that it started going down. So that hit the all-time high then, and it gave us the message that things are not as good as we thought. In the meantime, we noticed that S&P and the NASDAQ, they hit the highs on January 3rd. So this had already done that. So hopefully this is a good indicator that maybe good things are happening to the markets. But again, we are not out of woods, and especially the weakest ones are S&P and NASDAQ. But it looks like the Russell and the mid cap, they are basing and hopefully gathering energy. The VIX still high. we've had these big movements. We've gone outside the Bollinger, come back, we got a doji, but still there's nervousness, and it goes back. I've been talking about backwardation, and we're still in a backwardation. That means there's a nervousness still at present time compared to the months coming. So very much concerned right now, and VVIX is still, highly elevated at 127. This is interesting again, with all the talk about increasing interest rates, the flight to quality, the flight to safety has moved the 10-year interest rates to really the lowest in almost 2 months. So basically nothing really changed except we have a war, and it was the highest. We went over 2.05%, and now this has come down. The question is, we are right above 100-day moving average. So is this somewhere we're gonna settle? Is this gonna go back higher? FOMC is meeting, the inflation numbers are coming up next week. What's gonna happen? So the opposite is on the actual 10-year note, you see we are hitting, the price is hitting against the 100-day moving average. The same thing on the 30-year bonds. So the question is, will we be able to break through this, or are we really overbought at this moment, which we are actually here? So this might retrace somewhat, and would we go back to that 18-day moving average? So something to watch for. As far as the financials now, you can see with the rates dropping so fast, look what happened to the financials. Now, again, financials are a big key. They have been the glue holding S&P up. So we are in a big support zone. You can see it's almost quadruple. So we want to watch that carefully, the relationship with the interest rates. The dollar, again, by the way, I'm sorry, you see that there is a discrepancy a little bit about the dollar. Dollar has gone outside this Bollinger Band. So what is happening with the dollar? Of course, it's the safe haven. But what happens is, obviously, the treasuries are playing a role. So when the money comes to the treasuries, they have to be purchased in dollars. So if you're going to buy bonds, you got to buy the dollar bonds. So consequently, it's helping the dollar. The other side of it, where is this whole crisis, is in Europe. So there is that nervousness. So euro has hit the 110, actually, 110. So the money has really gone to either dollar, or we've talked about commodities, we'll talk a little more, for instance, gold, or gone to Swiss franc. So basically, that's one of the reasons of the strength in the dollar, which has gone, not parabolic like the other commodities, but it was a pretty big move. So we are outside that Bollinger Band, and we have overbought at this time. So we shall see what happens tomorrow night when the markets open. Now, gold, again, flight to quality, the concerns, and it had a really nice run. So we had a class on intermarket analysis, and usually we say, well, when dollar goes up, commodities they go down. But in the times of crisis or uncertainty, you see they can all move together. In this situation, crude oil, we look at gold and the dollar, all of them are moving up strongly, just because of, again, that flight to safety. So gold had a really nice week last week, and it's turned the momentum up. As a matter of fact, I think a month, 2 months ago, we talked about this big option volume activities for June in gold and silver. So that over, it was a large amount of the options activity. So whoever did that, I'm sure they are very pleased. So they're probably sitting in their island now and sipping pina colada somewhere. So, and silver had a strong, actually silver was relative wise was a little stronger than gold. And look at copper. We've talked about copper. We talked about the coiling. We talked about the Chinese New Year. We got to wait for that. And amazing. Once we got out of that, the low volatility, this is really strong move. talking about copper, this is something I just thought we haven't discussed it much. We talked about the miners, but this is the XME, which is the S&P Metals and Mining. And look at this huge move. Of course, when you think about aluminum, zinc, nickel, all the other miners, it has been craziness. A lot of, for instance, beverage companies, their profit margins have gone down because they cannot produce the cans. It's just, and if you look at Alcoa's chart, you see how strong it has been. So all of these metals are in big demand. And the opposite side this week, in the last 2 days, Bitcoin, which had a nice run beginning of the week, all of a sudden had a couple of days of sell-off. And one of the reasons, we obviously technical, we did go hit the Bollinger Band, but what happened was we were overbought and we broke below the 18-day. So what was the catalyst for this? Besides the technical, if you recall, we talked about, we hit the 100-week moving average. Obviously, the talk was with all the sanctions, freezing the reserves, the dollar, and other things that. So Russia has been actually one of the largest participant in the cryptocurrencies, and they've been they actually, rather than they were gonna ban the cryptocurrency in Russia, and they decided they just gonna monitor it. So basically, that was one way. So the question you should ask yourself, that gave the validity for the digital currencies and cryptocurrency in this situation, Bitcoin. And it initially obviously was positive. So you have this big move. Oh, yes, privacy, nobody can touch the money. What it enforced or brought to the attention of all the governments that, what, it needs a scrutiny. We are not going to be, obviously there's been talks about, let's say, funny money, like drug dealers using the digital currencies to get away from things, or cryptocurrencies. And so now the thought is, now the governments are going to start scrutinizing, even ask all the, as far as the cryptocurrencies to report, and they want to freeze those accounts, and few of them, they refuse. So the whole idea about, again, Bitcoin is the privacy, but then how far can governments allow that? So I think that's a big reason for this. And of course, crude oil. I mean, this is amazing. We were at 2014 was first hurdle in 2011. Now we're getting close to 2008. 2008, we hit 147.70 or so. So, and then energy stocks, the same fate. But let's look at corn. And this is amazing. Again, corn, Ukraine, that has become a big factor. These are big moves. These are called limit up. That means after it moves, you cannot trade. And people who have shorted it, they cannot get out. So you have this short squeeze coming in. So these are huge moves. And when I've traded grains for 25 years, maybe, never seen anything like this. These are limit ups continuously. And it gapped up on Friday, and it just, that's it. So big momentum. And this movement, I was looking at this in 8 days, it's equivalent of like 8,000 Dow points, something like that, when I calculated it. Just think about that. It's like it's every point is $50. So when you move from, it was like about 800, if I'm not mistaken, to 1,200 plus, or like 400, and that's $20,000 move in 8 days per one contract. So, and I didn't show the soybean because soybean is not part of the equation here. It's more of a, like, soybean is more of a maybe China's story in South America, the weather. We've had a freeze, by the way, in drought actually in Brazil. So that's affecting also the agriculture. On the other hand, you also have to remember the effect of all these on the live hogs and livestock and the feeder and the fertilizer and all kinds of chemicals that go hand in hand, and how expensive they've become. So that's another reason for thinking about the inflation. Expected moves were very interesting because the SPX, you can see it's been pretty wide, and this week is even higher. We're at 136. I think we're going to be at 146. And that just tells you the volatility is there, and it's getting wider. And we hit the lower expected move on Friday. We came pretty close to that. QQQ on Friday hit the lower edge of the expected move, and IWM came close, and it didn't. The Dow just stayed in the middle, and on the other hand, the bonds went the other way. We went outside of it and then ended up coming close to the upper edge of the expected move. And of course, gold and all the commodities way outside. I mean, from, look at the Tuesday, we've been just outside this expected move. The same thing with silver, and the financials went to the other way. We talked about opposite of what bonds were doing, and the energy following what the crude oil did. All right, so with that in mind, let's talk about emerging markets. As I said, I hope this is a segment that you find it valuable. We added it. I know it adds more minutes and more slides, but I think this is the world that we're living. And again, Russia being part of emerging markets, you can see how it can affect the whole global, not only politics, but the global economy. And we are kind of the markets have become enslaved. I mean, talking about real estate, now people are a little cautious. They're thinking, well, what's going to happen next with the war? What is happening to the stock market? So that could affect the housing market as well. So we want to take that into consideration. That's why I think emerging markets are important. One segment I want to add is I just want to give you a review where all the markets are for the past week and year to date. So when it's in blue, you can see a lot of Latin America, and we had a segment on emerging markets, and you can see that Latin America, they've been leading from Brazil to Argentina, and also we've talked about Saudi Arabia and Thailand. So, and you see Malaysia and Indonesia, and believe it or not, Turkey, they've been bitten off so badly, they're up. And other than that, you don't see, besides in the developed countries, is Britain and Canada, basically the ones that they are in a positive. So, but emerging markets as a total, they're down. I mean, if we count Russia, which is what has happened to it, which is not even here, it's been tremendously affecting all the markets. You see the Europe is down 11.1%. Germany is 11.9%. Russia, I'm sorry, here's Russia, 41.3%, which is really, it's not real, because we will talk about in a couple other slides what is happening in Russia. We don't really know. Everything is closed. The markets are closed. There's no valuation. So we've been working on the ADRs and GDRs and what is listed in London, for instance, and now they're all getting shut down. Nobody can actually invest in them because of sanctions. So how can you value these companies? So even this 41.3% is artificial. With that in mind, you can see the emerging markets are down 5.2 compared to more developed, from US to Euro area. So we did have a segment again about emerging markets. We talked about their bonds. So I thought it might be timely just review that. What is happening to emerging market bonds, and who can benefit from that, and who will really actually be affected in a negative way. So when we're talking about the bonds of emerging markets, there's three risks, especially because of what's going on with the war. So the number one is a risk aversion. Obviously, when we think about um, bonds and investing, we want to, again, be away from risky assets. So we want to averse risk. The second part is the commodity prices. And of course, this past week was the highest ever on the commodity prices. In 1 week, we never had so much gone up, from crude oil to wheat to corn to gold. So everything went hand in hand. So that, how does that affect the countries in emerging markets? And the third one is, what countries have a direct exposure to Russia and Ukraine conflict? So that could be, they could be neighbors geographically, they could be trade partners, whether they had tourists coming or going. So those are the three areas that affects the market, the bond market. So it actually affects all the markets, but we talk about bonds because of supposed to be the safety side and the yield. So the weak performers, most of them have been the commodity importers, and it makes sense, especially when we talk about food and then talk about energy. So you can see Pakistan, Egypt, and Kenya have been affected negatively, and we've had some of the higher yielding like Ghana, Ethiopia, Argentina, and Suriname, and then we have Sri Lanka and Tunisia that has been basically, because of both commodities, they have been high yielding and importing commodities, they've been affected negatively. So you will say, okay, well, when you're an importer of commodities affects you, but what exporters of commodities? So you would say, well, they will be affected positively. And you would be partly right, because there are countries like Zambia, Qatar, Saudi Arabia, Brazil, United Arab Emirates, Angola, Oman, Kuwait, South Africa, they're all, it has been positive for them. But the positive impact of these commodity prices, it has been more offset by this risk aversion. So again, that's what we talk about the dollar, for instance, that the money wants to go where there's a safety. So that's why now we have the wide spreads because of what is happening in Russia. And that's a direct effect. You can see, I mean, a month ago, 2 months ago, we would not be discussing, we probably will start discussing a little bit about it, but it was not a big factor at that time. And now just one conflict affecting so many economies. And in this case, you can see the spread has gone from 13 to 70. It's been widening in 13. I mean, 57 out of 70 have been widening spreads. So I just want to show you some of the countries being affected the most around the, this is from 18 February to March. You see the 150 basis point, and very few have had the negative spreads. The next thing is, as I mentioned, the whole market is locked down. So what Russia did, this is on Friday, the parliament decided to pass a law that they allow the government to use their national wealth fund, which is about 120 billion, I believe, is to start buying stocks of the Russian companies to try to keep things calm. And that's what they are looking at, how they can do that. It's Crimea in 2014, they decided to do that, but this is completely new experience, I think, in my opinion, or it's more intense. So they are trying, that the rule was they would do this if the liquid portion drops below 7% of the gross GDP. In this situation, it didn't, and they had to, the liquid asset to exceed the 7% GDP. So they have made an exception. Now they're at 6.6%, but it is the crisis moment. So now, as of February 1st, yeah, exactly, they had 12 billion, 0.7 billion in their National Wealth Fund, which is only 6.6%. So it's supposed to be, if this is over 7%, they can do it, but they decided to do that. So I just want to share that with you. What is Russia is doing? We will see what other countries have been doing. What is Russia? Now, a couple of weeks ago, I also talked about Russia and their funds and the ruble, and we were right around here. Now, this goes back to January 1st, 2016. We were at 75.85. We talked about it, that we've been hitting that resistance, and look what happens in just 2 or 3 days. This is unbelievable, and this is not going to stop. So this is free fall. The next thing I want to talk about, the relationship between the sports and the political crises or conflicts, and how I thought to just share with you some of the things what happened in the past with the sports bans and boycotts. And I mean, you can read it your own, but you know, we've had the Suez crisis, we had the Arab, you know, the Middle East crisis with the Israelis. In South Africa, we have the apartheid, you know, with the they were banned to participate in any type of sports, whether it's the World Cup or the Olympics. And then 1973, we had the Chile, the Pinochet's coup. So Montreal Olympics, we had Tanzania and 21 others countries. What did they do? They boycott the Montreal because New Zealand had a rugby game with South Africa, or participated in tour of South Africa. And of course, we had Taiwan. Then Moscow, I remember that vividly, you know, USA and 66 other countries, they boycotted that because of the Afghanistan, you know, Soviet Union went right after Iranian Revolution, they moved to Afghanistan. And then Moscow, Eastern, or Russia and Eastern, or Soviet Union and Eastern Bloc, then they decided to boycott Los Angeles, you know, Olympics. So 1988, we had North Korea, Cuba, Ethiopia, and so on. So the reason I want to mention that now in 2022, which is amazing with Russia, as you know, they have the playoffs with for the World Cup, and there's Sweden, Poland, and I believe Czech Republic. They are in the same group, and they're supposed to do the group, and the winner goes to the World Cup. And all 3 teams, they refused to play Russia. So we never had that before like that. So, and then now FIFA has decided that they're not gonna, first of all, the European Championship was supposed to be in the Champions League was supposed to be in St. Petersburg, and they moved it to Paris. And also the Paralympics, they blocked Russia and Belarus and Beijing. So just food for thought as far as what's going on. Everything's about Russia. Now I just thought to share this map with you, and what all of a sudden the Germans, very much Europe, depends on the natural gas pipelines from Russia. So these are all the pipelines going to the different countries. And as you could see, Germany halted the certification for the Nord Stream 2. So this is important. But you know, that is the energy is the blood of all these industrial countries. So we'll see how far that will go. The next is, just want to share with you, the largest oil producers around the world is United States, Russia, and Saudi Arabia. So you see how, again, Russia has a winning hand in that sense, but not totally. What is happening with the freezing all the assets? Obviously, Russia needs a hard currency. So if they don't sell their oil, they're not going to have the funds. So they want to. So if US and some other countries say, we're not going to buy, we're going to boycott the imports from you, that's probably Russia thinks, oh, good, you know, it's going to hurt you, but it's going to hurt Russia as well. This is another thing. Again, these are all the relationships of how just one conflict affects so many. And I thought this is an interesting chart to look at. How about Russia's direct investments in other countries? So the funds and some other companies, countries depend on Russia's investments. So um, as you can see, the largest one is the Republic of Congo, and that's the percentage of their GDP that percentage of the GDP comes from Russia. So in blue, they are in Europe. In black are their developed countries. You can see Austria. And then in red, there are African countries. So you see, there are quite a few countries that, they depend. Obviously, some of them make sense. Kyrgyzstan and Belarus. Okay, we can know Georgia. But, something would have thought like, Austria, for instance, and, Ukraine, that makes sense. So, but I thought that's interesting, again, the interrelationships. The other thing I want to share with you, again, talking about commodities, talking about just the food prices and about the food itself, you can see Russia and Ukraine account for a quarter of global grain trade. And there's 102 million tons of from Russia and 94 million tons from US. So you see Russia, US, Brazil, and then EU and Argentina. So that's why this is important to follow this conflict. The last but not least, I want to share this with you again, being very familiar with the Middle Eastern cultures and Central Asia and Asia as a whole. What we talked about in our class in emerging markets, I mentioned it's more than just the numbers. What is the GDP doing? What is the trade deficit? What is the account balances? It's more than that. It's about culture. So when I read this, and I thought, okay, well, this is good because, this has really united the whole world in a sense. There's going to be a loan disbursement of 460 million euros. And the World Bank, which is 509 million approximately, most of it coming from a big contribution coming from Sweden and Netherlands. And they can receive these funds immediately after the board approves them, which is early next week. So then I just want to share this again, because I've seen this. I've seen it in Middle East. I've seen it, what is happening with the US, and we will discuss this, which is really interesting. US has been supporting, sending large amount of money, for instance, to Hosni Mubarak in Egypt, Yasser Arafat in Palestine, and all the different countries they've been sending. So whether they meant well or not, they were doing it, and it was meant to go to the people. So I said, let's look at, this is for 2022, and it's called the perception of corruption. This is a little different. And we look at some of the least corrupted countries, which are mostly like in Scandinavia and in New Zealand. And then we look at Canada, and of course, North America, and then Western Europe, and some of the most corrupted countries. And when we say that, and the reason I say it, if you recall, even this is not just in United States, in Middle East or Asian culture or Africa, that you see quite a few of them. It is even in Europe. When we had the crisis in Greece, unfortunately, in Latin America, the same thing. The money goes to the government, which is meant to go to the social programs, helping people. Half of it is, before even getting to the budget, is already disappeared. Whatever it is, the president, or in some countries is the king, or is the finance minister, all the ministers, somebody gets that money, and half of it, if they're lucky, goes to the people. So I just thought to share with you some of the least corrupted countries. So this is, again, hot off the press: New Zealand, Denmark, Finland, Singapore, Switzerland, Sweden, and Norway. They are, again, the least corrupted countries. And Chile from, from South America, the United Arab Emirates in the Middle East. And then we go, I want to see the last two columns I want to show you. So the worst of all of them is Somalia, and then South Sudan, and Syria, Yemen, Venezuela, Sudan, and then so on. So what interested me was it is in Europe. Believe it or not, the most corrupt country in Europe is Russia with 30, and the second most corrupted country is Ukraine. Now, it has nothing to do with what's going on, as far as I totally agree, but this is, unfortunately, or hopefully, this is a change. When there are money coming in, it's not necessary is where it ends up to be. And I leave it at that. And I know, for instance, Poland is helping a lot. There's 1.2 million refugees already, which is pretty sad. But I'm so happy, a lot of countries are united, but it's never, never easy. I mean, I've had very close people to me who've lived in the camps. They've been refugees. So, but this is something that it's important to understand, that the governments, regardless of the propaganda or regardless of what their intentions, sometimes they have to monitor, or outside monitors have to know where the money is going. All right. Okay, that's for my political speech. Some of the lessons. I'm sticking with what's going on again in Russia, because these are learning moments, and I hope these are the things that you can remember if there was another event. And again, I've seen similar things, and that's why I'm hoping to share with you, and that you find it beneficial. Now, what is happening, some of the ways obviously to invest in Russia has been through exchange traded funds, and the largest one is RSX. Now, they on March 3rd, what has happened, Van Eck, number one, the iShares decided there's an ERUS, the E Russia, has halted, and they decided, Van Eck decided, because of there's no liquidity. Remember, the exchange traded funds are basket of investments in whatever the guidelines are. In this case, it's the Russian companies. Again, 2 weeks ago, we talked about the holdings of these, the RSX specifically we talked about. So what's going to happen? They have decided, as I mentioned, that they are going to halt the inflows. So when the money comes into these ETFs, they are distributed and they go actually get invested. It's like the mutual funds that they are open end, they do that. The closed-end funds, and that's where we will have a class on exchange traded funds and the closed-end funds. Closed-end funds are set number of shares, and they just, it's like a stock, they just get traded, but they are set amount that has to be invested, and then they just buy and sell. So when there is no new money coming in like the stock, unless they issue new shares. So what has happened now, RSX has become really a closed-end fund, because they're not going to be able to accept any new money, because where are they going to invest? So the problem with now these funds are that there is really no underlying value at this time. How can we value the basket of stocks in this situation that they have no valuation? So basically RSX and ERUS, they've been traded, which I will share in next slides, just to give you some examples what I had gone through in the past. But this is basically is almost like a roulette table. It's a 50-50 binary investment, because what it is, there is no existence of the markets right now. The ETFs are being traded. So two things could happen. Either, there's a peace and everything goes well and everything opens up, and whatever people had bought at whatever price is going to double, triple, quadruple, or it's going to completely go down to zero. At this moment, when I'm looking at the underlying value of like RSX, it's probably under $1. It's like 85 cents. And it was trading at like 565 to 590 on Friday. And when we did our class 2 weeks ago, it was at $25. So because of that, there is a big premium right now, which is being paid. And that's what the closed-end fund does, but not in this situation, like 600, 500% premium. So basically, this is like almost gambling, thinking that, oh, if things go well, this could happen. With that in mind, I want to share something with you, one of my own experiences when we had the Egypt's uprising. You know, we had when started in Tunisia, and if you recall, Hosni Mubarak, it was overthrown, and there was this revolution. So what happened to the stock market in Egypt? They were closed on January 27th. So I want to share with this, January, because of the protest that ousted Hosni Mubarak. And that stayed closed from January 27th to March 23rd. So it's almost 2 months. So there was no stock market, but there was a ETF called EGPT, Egypt, which was actually being traded. So you don't have any underlying investments in a sense. You could not value because the markets are closed. So, but there was this perception. At that time, what I did, I was actually in that moment, I was in Argentina, and I was looking at, let's see, this is actually, let me go, I start with this. So this is where the markets actually, they came and closed, and this is when they opened. So that moment, my idea was that this will end up positive, at least in the short run, because what will happen is there's a dictator, Hosni Mubarak, there was a corruption, and Egypt is not a big market, even though it's large in Africa. So I actually started trading, and it was based on charts and other things. So you see, these are the activities before, when the markets were open, and this was Egypt. This is what happened after they closed, which is almost 10 times of the volume being traded. So at that time, I was managing, portfolio. So I got in around here, and I closed somewhere around here. We got in about 60 plus, 6304, and we got out about 75, something. We made like about 25% in a short time. And again, I remember this because at this time when I sold it, I was, as I mentioned, I was in Buenos Aires. I had to call. It was a little difficulty connecting. But anyway, so this was a trading vehicle, not a fundamental understanding of what the markets are doing. So of course, what happened, the markets opened that day, they plunged 5%, and they kept going down. So this is the chart I want to share with you, that this goes back, this is the 2011. So what happened, they kept going down till end of 2012. So it's still, there was no closure yet. Yes, it was overthrown, not then they had to assembly, then it's never easy when the country goes through all the big changes. So, and that's when it went from that $75 close to 80 to $36 by 2012. And it came back, and now this is where we are right now. So I mean, that's reflection of what the Egyptian market is. So the Russian market right now, you could look at it somewhat like that, but then it's much bigger than that. It's because Russian market was bigger than Egypt, and there's a lot more other influences involved. And we talk about sanctions and talk about the world uniting. And in Egypt, there was a lot more. They were actually opposite. There were a lot of support. for this. Initially, it wasn't, but then it became more. But this is the experience I had with when a market is halted and an ETF being traded. I hope you find that helpful. Another lesson I just want to share with you with the gold performance during the stock market crashes, when we've had the big declines and over the years, and majority of time you can see they have done very well, except this 1980 to 1982. What had happened at that time, we had the Hunt brothers. It was, if you recall, silver went to $50. It was the cornering the market and manipulation and other things. So that was a big part of it, that gold and silver really dropped because they had gone parabolic. Gold went to over 800, silver close to $50. And then, although the Hunt brothers were not solely responsible, there's a lot of other theories besides that. But other than that, you can see while the stock market has dropped 30.9, the gold has gone up 6.5. And as I always said, the silver is somewhere between the market's economy and the precious metal. So it's been right in the middle. I mentioned about this week. This is the past week. Just want to share with you how big it was. This is not a stock. This is a commodity. Wheat was up almost 40%. Gasoline, it was over 20%. Palladium, corn, iron ore, Brent crude, nickel, aluminum, copper, soy. I mean, everything was up big time this past week, which broke the record. All right, I'm gonna share with you something from the technical analysis, our candlestick classes. So this is something caught my eye on the first day of the week. I think it was Monday or Tuesday. And so I noticed this. This is the AVAV, which is the AeroVironment. It's an aviation company. They became famous during the Iraq War. And these are like before pre-drones, they were like these little airplanes. And I remember I met the CEO, and it was like really interesting. He was from Irvine, and we looking at selling these for 500,000. The soldiers, when there's snipers or things like in Iraq, and it's like a mile or 2 miles away, they could use these to have a camera, go take a look at it, and then they will even use bombs. So anyway, that's how they became famous. And so there is, when you have a candlestick like this, and then you have a doji right after, and then doji is a small body with long tails or wicks. Generally, the next day you watch that doji, if the opening of the next day, whatever it is, generally the stock will continue that direction. What I mean by that, in this situation, as you can see, the next day it opened higher than the body of this doji. And because it opened, generally that means it's going to be positive, it's going to go up. So at this moment, you could have longed or you could have bought the stock with having your stop loss perhaps in either the body or the wick. And generally, the movement is equal to the body of the previous where the doji was. So these are pretty close. As you can see, the bodies are good. And we went to inside the cloud, and inside the cloud is generally neutral. The good news was we also were above the standard and turning line, the baseline, and basically that was positive. So I fast forwarded it to, again, this week was a down week, just remember that. So this is, I enlarged it. So this is what this was this Monday. This is what AVAV did this week. So it was a nice move from at that time, let's say 64, and we are at 74. So this is a week, and now we're breaking above the cloud. So again, this is called doji sandwich. Usually, again, if would have gone the opposite and opened here, then there's a good chance it would have gone down. But this body being a large one telling us that there's a good chance it will continue, especially if we broke above these turning and standard lines. So, but that's a candlestick technical analysis moment of the day. All right, with a few more minutes, I want to share with you the trade of the week, a few trades that I had. Number one, if you recall Thursday, that was a beautiful, we just filled that that gap so quickly. And then Friday we didn't. It was more of a professional day, a lot going on with the NFP. When it comes NFP, that's not one of the days you want to bet on the gap play, but we will talk about NFP trade. I was asked, last week, and I think I talked to a few of you the past Thursday, if I had any ideas with the markets. Remember, it was February 24th or 28th, actually. Yeah, February 28th, when the invasion happened. The markets, was it 28th? No, it was the 24th. Sorry, the 24th. What happened was the market dropped a lot. One of the things that goes back to valuations and doing the fundamental analysis. This is Paramount, which was called Viacom, and we've talked about Viacom. They had a big drop. There was a subscription and other things, and I found value, and I thought somewhere right around here, I thought there's a good value in Paramount. From technical point of view, we got a nice support. Valuation was beaten up too much. So I suggested this might be a good time to get in. So this is where the buy came. And remember, we had a negative week, and this is what Paramount did. So I didn't buy the stock. Basically, I went direct, Chanel, on a just pure call. I went with the call 30, and I went with April. I wanted to have a higher delta in 6 weeks of expiration, so I could give it enough time. And fortunately or unfortunately, 4 of my targets were hit within a couple of 2 or 3 days. I have one runner, and I got these at 143, and within a week we were up to $6. So I have one runner. I haven't done anything with that. So from 143, $6. That's pretty good for 1 week. So, but again, I was out of it. So this is like really the bank money, as they call it. So that's what you could do. I mean, just one idea as far as the valuations go. The other trade I did was Monday, again, being the last day of the month. And also it was very much news driven. I decided to go long S&P at 12 o'clock, thinking about the turnaround Tuesday, but also thinking that it's the last day of the month. Usually the markets like to balance things. And so that was a bet that I made, and I bought S&P at 433. But also, if you recall, I mentioned about the 4,300 level and S&P, and for me, it was something that every time it went through, it kept, or it bounced. So based on that, I mean, the first day actually, I was covered. I mean, within half an hour or so, I was 2 of my targets were hit, and then the last ones were hit on Wednesday. This was a Wednesday's expiration. So, and that's where I got out. So that was another trade. Basically, I want to share more options than the futures, so you could see that. I also did my gold trade on Thursday. I did only 5 because I thought we were really overextended, and they might be a profit taking. So, but I was waiting for my 16 minutes. There was a support on a daily on the trend line, and basically I went in, and we had a gap up, as you know. I got hit on 3 of them. I had 2 left for Friday, gapped up, got me filled. and then the rest is history. So I didn't have a runner. I did put my 100%, but it already got hit as soon as the market opened. Of course, I was happy when I saw this, but then you see this. So that was the gold trade. The last but not least is every month, usually first Friday of the month, we have our non-farm payroll. And non-farm payroll, what I found out is like the first 5 minutes, these are 5-minute candles. As soon as the numbers come in, we have a wild fluctuation. And generally, the high and low of the day is usually made in that 5 minutes. So you could have a bracket made. And in this situation, you can see this became the high of the day. And once we broke the low of the day, this would have been a really nice trade. If you want to do futures, you could do micro futures, or you could have done options. And we tried to get back in, as you could see, we did the 50%, but it just couldn't go. So the high of the day was made in the first 5 minutes. So that could be played. As I mentioned, you could use options. You could have done credit spread, vertical debit spread, all just based on our channel or bracket trade. So, but that was, again, if you have followed this, I think for the last 4 or 5 months, we've been talking about it, and it has worked every single time. All right, quickly, ETF of the week. Again, I'm going back to Russia. I just want to share some of the largest funds. There are more funds, but I wanted to go, it's the 517. Oh no, these are all the funds actually. All the funds, especially with the bond side of things, that they have exposure, which ones have the largest exposure, and the WisdomTree Emerging Markets Local Debt Fund. So they have 5.9% of their exposure to Russia. So just be aware of it if you own any of these stocks. Like EMB we've talked about, which is the largest emerging markets ETF, and they do have 3% exposure to Russia. Just food for thought. Stock of the week, I want to share this. We've, I think, talked about this a year ago. Basically, it was about the more of a linear regression channel. We were looked at as a value. It was fundamentally a valuable company. It is, it is a stock of the week with the IBD. Fundamentally, you can see strong. Industry group is weak because they're in the biomed, biotech, but everything else looks good, and they have a high relative strength. They look pretty good. I think when we talked about, we thought that was about $188, was 2 standard deviation outside the 2 standard deviation, and it went to 220, and we got out of it at that time. But it looks like pretty strong in this environment. So I thought to share that with you from fundamental point of view. These are the charts where we've come from, and it's moving back up. These are hourly from market profile where we stand, and basically this is from Guru Focus. It is fundamentally, it gives a lot of value. It shows that it's pretty undervalued, the stock, if you go from the valuation point of view. So anyway, I believe they're in a, I think it's a kidney, and it's like in a medical, I think mostly to do with the kidneys. So anyway, that's the stock of the week. The 2 scans I did this week, for this short, for the squeeze play, I want to look at the consumer staples. There were a lot of good setups in them. So I thought maybe you can just look at them with the way the situations are. We're looking at companies that they have the pricing power. These are the non-durables, they're staples, so people need them. And the second one I want to look at, we had a talk about relative strength in the past. So I want to look at IBD's top relative strength ratings for stocks that they are under $10, but they are fundamentally very strong. So maybe you can find values in them. They have a high relative strength. Some of them have very good earning per share strength. So I looked at the composite, which takes the earnings and the relative strengths, and also, again, the fundamental side into consideration. So I was looking for more of a 99 numbers, but these are all under $10. So just in case you're looking for something that 100% is not related to what's going on with our stock market. Last but least is that still we got some earnings coming up from, again, we got Dix, we got Blink, we got DocuSign, so Oracle, Ulta. So just be prepared for that. These are the basically our volatility ones. And again, we got Dix, DocuSign, JD.com, Riven, Neo, Ciena, Blink. Whew, okay, thank you very much. I hope it was helpful. I am gonna stop the recording and